Hey everyone, welcome back to my channel. It's Matthew Varga here. In today's video, I'm going to be talking about index funds, what exactly they are, some pros and cons to them, and why they might be a good addition to your portfolio to help bring you closer to financial freedom. Now, before we jump into today's video, make sure you give this video a thumbs up, subscribe. These things really help with the YouTube algorithm, helps get this video in front of more people so we can grow this community. Now, before we get into what an index fund is, it's important to know what an index is. So an index is a pool of companies that all together make up a particular market or a segment. Now, people look at indexes so they can see how a market is performing. Since an index is made up of many different companies, it gives you a better overall idea of how a market's doing, as opposed to if you were just to look at one company to see how the market's doing. For an example, the NASDAQ Index is typically an index people look at to see how the technology industry is performing. So the NASDAQ is made up of over 2,500 companies, really focused on technology. So it gives you a better overall idea of how technology market is performing compared to if you were just to look at, say, one company like Google. So just because Google is doing good or bad doesn't necessarily mean that the rest of the technology industry is also doing good or bad. So some of the other indexes that people look at are the S&P 500. Now the S&P 500 is made up of 500 of the biggest companies in the US, and it is considered to be the best indicator of how the US market as a whole is performing. Another one is the Dow Jones Industrial Average. This is also a very well-known index, and it tracks 30 of the largest companies in the US. And then we also have the S&P TSX, which would be Canada's version of the S&P 500. So it tracks over 250 of Canada's biggest companies. So now that we know what an index is, it allows us to have a better idea of what an index fund is. So an index fund is a fund that looks to mimic and track one of those indexes that we just talked about. So for example, an index fund could be looking to track the S&P 500. It could be looking to track the S&P TSX, the Canadian market, or it could also be looking to track, say, the technology market like the NASDAQ, like I said earlier. So the key thing to know with index funds is that they're not looking to beat the market or do better than the market. They're looking to mimic exactly or as close as they can to that particular market that they're tracking. So the reason why index funds are appealing to a lot of investors is that they're a more passive, hands-off approach to investing. So it's a great option for beginners or people who just don't have the time and are looking for an investment that they can really just look at once or twice a year just to see how it's doing. So a couple of key things to know about index funds is, one, they're an indirect way of investing in the market as a whole. So since an index fund is looking to be the market, it's a great way for an investor to get exposure to a whole market. For example, if you thought that the US stock market was going to have a great year and continue to go up, then you could purchase an index fund that tracks the S&P 500. Since an index fund buys shares from all the companies listed on that index, if the market were to continue to go up, so would the value of the shares of those companies, so would the value of that index fund go up as well. Another key point for index funds is that they're available in a wide variety of sectors. So you can buy index funds that are for small cap companies, big companies. You can buy international index funds. You can buy index funds that are on the bond market side. So there are a large variety of index funds. Some are more focused, some are a bit broader. So there's a lot of great options for a person to pick a fund that's going to fit into their portfolio. So index funds can be a great way for a busy, first-time investor to get started with investing, but there are some pros and cons that you need to be aware of before you put money on the table. So one of the main benefits to index funds is they have a very low management expense. So because index funds aren't trying to beat the market, they're not trying to pick winning stocks, they're just trying to mimic the market exactly, there's a very low cost for these funds to be created and managed. So this means that the cost to manage these funds is a lot cheaper than an actively managed mutual fund. So for example, a typical cost for an index fund could be anywhere between 0.04 to maybe 0.25%, whereas the more actively managed funds that has people doing research and an active portfolio manager, some of those expenses can be 1 to 3%. Now I know 1 to 3% might not sound like a lot, but I actually did a video, which I'll link right here, that goes over and gives you an example of how that 1 to 3% can really eat into your investment profit that you would have made over a long period of time. Another big benefit to index funds is that they have built-in diversification. So I know a lot of people who are just getting into investing have heard about diversifying and how it's important. So because an index fund mimics the market as a whole, it already has diversification built into it. So going back to the above example where I talked about the index fund that tracks the S&P 500, that fund would buy shares from 500 different companies that make up that index. So you're getting exposure to all 500 of those companies, which would be pretty hard to do if you were just buying the shares individually yourself. Another huge pro to index funds is that they're pretty simple to understand. Like I said, they're just looking to mimic and match a market. So they're not doing any advanced investment stuff like options or futures. So it's a great option for more passive beginning investors looking to start to build their portfolio. Okay, so there are some of the pros of index funds. Now let's look at a couple of the downsides. So one of the big cons with index funds is lack of flexibility. So if you're an investor who wants to have more control over the companies that they invest in, an index fund might not be a good choice for you. For example, if you wanted to invest in cryptocurrency or something like that, most index funds don't have that. Or if there's companies that maybe you didn't like that were part of an index fund, there's not much you can do about it. Another downside is that it's more of a low risk, low reward investment strategy. So because a lot of the companies that make up an index fund are larger, well-established companies, you're going to get more of a slow, steady growth as opposed to maybe picking a stock that just shoots up and has massive growth. So like I said, it's a little bit more low risk, low reward investment strategy. Another downside is that they're not really good for a short-term time frame. So as a lot of people know, stock markets have their ups and downs, but over the long term, they're consistently averaging higher and higher. So if you needed those funds in a couple of years, say to buy a house or to start a new business, you might be selling at a point when the market's at a down point. So you could be missing out on profit. So that is why an index fund tends to be a better option for people who have that long-term time horizon. So there you have it. Hopefully after this video, you have a better idea of what an index is, what an index fund is, some pros and cons to it, and why it might be a good addition to your investment portfolio. Index funds are not for everyone, but they can definitely make a great addition to anyone's portfolio. Since they offer a more low-cost, hands-off approach, it can be a great way for someone to get into investing into the stock market without having to do hours and hours of research investing in individual companies. So make sure you give this video a big thumbs up, subscribe if you're not already subscribed, and if you want to see a video about some of the best index funds to invest in, leave a comment down below and I'll be sure to do a video about that. Thanks again for watching and I'll see you guys next week.